Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 313, 28th of November. And Nifty has hit a all-time high today. So what a great day to remember, where Nifty, Sensex, Bank Nifty all have hit new highs. And what we want to go through today in our research is what happens after we hit fresh all-time highs. So we'll go through the past history of Nifty and see what has Nifty done once it hits new highs. So along with Nifty going up 0.3%, while we hit all-time highs, but the momentum across the market was missing. So energy stocks were up 1.3%, infra was up 0.8%, but in most sectors it was a very iffy sort of a rise, if any, and metals actually saw a 1.1% drop. Nevertheless, for the last 1 week, most sectors are in the green except metals, and PSU banks, as I've been mentioning, have kept the lead with up 54% in the last 12 months, 36% over the last 3 months, and 18% over the last month. Overall, the market has done what it wanted to do, go to an all-time high, but now what is the question? Uh, in terms of the broader markets, as you can see, extremely poor performance today versus the Nifty, or at least the thought process around an all-time high. At all-time highs, you would assume that everything is very exuberant and things are just flying off, but that was not the case. Nifty next 50 was up 0.2%. Mid and small cap index was doing better at 0.8%. Small caps were up 1%. So there has been a sort of phase shift as large caps ran up to ensure that we hit a all time high. Small caps and mid caps were still about 3 to 5% lower than the corresponding period 1 year back, not even from their all time highs but from 1 year back. And that differential is being caught up now, because usually you would see over any one given year period, small cap and mid caps should be outperforming the Nifty if it's an up year. So it does seem like that small caps are now catching up, and maybe small caps and mid caps will also go and try to hit an all-time high. In terms of weekend investing performances, MI20 up 1.88%, MI35 up 1.35%, MI Evergreen up 0.8%, MI50 up 0.8%. All these doing quite well with the mix of some small caps in some of them. Others were muted between 0 to half a percent, and MI25 lost some ground, 0.17%, specifically because of one or two stocks. Heat map for the day, Reliance was up 3.4%. And if you calculate the component of Nifty move because of the Reliance weight in Nifty, it is about the same as what has moved. So if Reliance had not moved today and everything else remaining the same, Nifty would not have moved. So it was a Reliance day from the perspective of making an all-time high. BPCL up 5%, Tata Consumers up 1.92%. Other than that, I don't see much of green on the screen. And in terms of losing side, it is actually a bit of a uh, irony that the day Nifty is hitting an all-time high, important Nifty components like HDFC Bank, HDFC, Infosys, Bharti, Tata Steel, JSW, they were they did not participate in the rally at all, and they actually fell. So the broader participation is missing, and let's see where we go from here. Tanla platforms, top gainer, 11% up. MMTC up 9%. Rail Vikas, amazing stock, is up like 70-80% in like no time. In couple of our portfolios, it is up maybe like 50 or 60%. Apollo Tires up 6%. Seat up 6%. So huge run in tires, huge run in rail stocks, huge run in public sector enterprise stocks. Delivery down another 3% to 321. Macro tech developers down 3%. Vedant Fashion down 3%. Jindal Steel down 2.5%. Honeywell Automation also 2.5% amongst the losers. So this is the Nifty chart, and we want to see what happens after a fresh all-time high. So you can see the chart. I mean, we were nearly at a thousand Nifty level, 2001-3. From there, we rose to about 6,600 by 2008, and then we had the great financial crisis. So this top that we made here of about 6,500 did not, and we came very close to it in 2011, did not breach till about 2013 mid. So there was a lull of 5.5 years uh, before a fresh all-time high was made. And then we went to about 9,000 here in 2015, and we had a year and a half of correction, and then we broke that on the higher side up to about 12,200 odd. And then we had the COVID crash, which was recovered within 9 months, and from there we had gone to 18,600. We had corrected here, and now we are breaking 18,600, or at least near it. So these are the only few instances of fresh all-time high that we got after a brief break. So at least 12-month break after the past all-time high. If we see that study, that if 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 the Nifty is crossing to a new all-time high after a 12-month break of consolidation or correction, what happens next? So that is the purpose of the study, and this is how it played several times even before 99. That in the decade of 1992 to 2000, you can see that the Nifty virtually did not make an all-time high for almost 10 years. So we are fortunate that India is a high growth market. It is growing very rapidly versus the rest of the world, and hopefully we will not be able to see a decade like this where index has not returned to a all-time high for 10 years in the next coming few decades. This has happened before. So just to sort of not have this expectation that all-time high means that we'll just rocket up and not look back, that may or may not happen. Also, this next decade from 95 till about 2005, you can see that while after 5 years this high of 1400 was taken out, but just about 20% higher, and it collapsed again, and then it took another 5 years or 4 years to come back and make a new high. So there have been pretty somber statistics from the past. And of course, the 2008 great financial crisis took, as I mentioned, almost 5 to 6 years for a new high to be broken. So all time highs are extremely important. They, in a way, signal that all the weakness is over, or at least there are no holders of index who are now in loss. So there is no pressure of selling at an all time high for any stock, or for any index for that matter. And it's a symbol, it's a very symbolic event that an all time high means that there is no resistance now, and you could fly in the air, so as to say. The same happens at all time lows also, while going down. So uh, if we look at the performances past the post all time highs after a 1 year gap period in the past. So the fresh all time high after 1 year gap minimum, when it reached in 1999, Nifty was 1369. Within 6 months, it made 25% gains. Within 1 year, however, all those gains were gone and you were at virtually flat. Within 2 years, you were down 21%. Within 3 years, you were down 27%. And within 5 years, you were up 15% from where you started. So a very nominal sort of growth came in 5 years, despite a all-time high which came in after a while. So let's go back to the chart and see. Uh, so this is the point that you're talking about, that it came off after a while, but then it just peaked out and came down again, and then it took a while to come back to a reasonable CAGR after that. Second case was after 2003, when an all-time high was made. Level was 1756. Within 6 months, we had a minus 14% move. At the end of 1 year, you had a plus 14% move. 2 years was 61%. 3 years was 123%. And 5 years later, we were at plus 74%. So very respectable run from December 2003, where after 1 years, 2 years, 3 years, and 5 years, you had fantastic gains. Third case was after 2013. This was very near the elections in 2014 when they happened. 6,324 was the Nifty level. So within 6 months, you had 5.8%. Within 1 year, you had 31%. And that stayed stagnant for 2 years, for second year and third year. But at the end of 5 years, you had plus 66% gain. The fourth case is very recent from 2018. So if you remember, after the 17-18 calendar year 17 run, after March 18, we had a huge dip because SEBI reshuffled all these classifications of portfolios and mutual funds had to come out of small cap stocks, etc. The Nifty was at 9,000 level. Within 1 year, when you made the all-time high, you were at 10% gain. Within within 1 year, you were at 14.6%. I'm sorry. Within 6 months, you were at plus 10%. Within 2 years, you were here. But within 3 years, all that gain was gone, and you were at 1.2%. But at the end of 5 years, you had a very respectable 85%. This is a post-COVID gain. So while there is no, real trend or a formula that you can calculate out of this, that we are at Nifty all time highs, so hence this should happen after 6 months, or this should happen 1 year. But the probability is that a year from now a positive outcome is more likely. Let's put it this way. And 2 years from now, a positive outcome is more likely. I mean, we are not looking into a situation where the markets are going down. We are looking at a situation where markets have taken time, have taken about 13 months to absorb the excesses, for the earnings to catch up. And now, possibly, if the economy performs and if the global economy allows us to perform, then there is room ahead to go up. I mean, if you also look at the traditional valuation metrics from a fundamental perspective, Nifty forward price earnings had reached some very high figure. I don't track this, so I don't know, but it was somewhere between 30 and 50, 30 and 40. And now that has come down to somewhere between 20 and 25. So there is now room to go to excesses. So we are more closer to normalcy, which is between, let's say 17 and 20, uh, than when we were between 30 and 35, or 35 and 40, so on and so forth. So from that perspective, we are well placed for a good run. We don't want to time the market. We are coming in with our SIPs. We have our strategies running. Most strategies are allocated without much cash. So there's really nothing to worry about or trying to time it. We have shown with a uh, long-term SIP strategy model that even if you came in at a high in October 21, we are sitting at a 27% XIRR on that strategy. So the strategy not being important, any strategy which does 12, 13, 14, 15, 16, 17%, and you're doing a sip through it, and you get a time period to go through a lull, actually helps you. But once the takeoff stage comes, then of course you're looking for a fresh higher move above. This is where we sit now. So we have taken all this period from last October to come here. We may go up very strongly, but we may not, and we may just maybe chop around, maybe go to 19,000, come back down, and then after some trigger, maybe it will be elections, maybe it will be budget, maybe it will be something else, maybe it will be some QE of some format that may come around in the next couple of quarters as the world goes into a recession. You never know what the trigger is going to be. But one thing is for sure, Indian market is ready to go up. Other markets are still reeling at 52-week lows, so they will take a long time to even come back to their previous highs. But we are sort of at the like an athlete is ready at the start position and just waiting for that gunshot, that gunshot happens and we sprint across. So that's the setup for the index right now. And you should look for strength in the index. You should look for stocks that are making new highs, because that is indicative of where the action is where the strength is, where the next winners are going to be from. So this is all I had for today's daily bite. I hope you are enjoying these series as much as I am enjoying doing this. A lot of effort goes into all these calculations and research on a daily basis, and I can congratulate my team for that. I request that you please share these videos with your friends and family groups where you feel that some basic, simple financial knowledge can help others, become financially independent at some point. It is only after, some good ideas get shared do they actually get implemented by a few. So do share these videos widely as much as possible, and that's a big help to me. And thank you again for your time, and I'll see you in another daily bite. Bye.